Welcome back to the Eric Krown crypto channel. Wishing you a happy healthy start to Sunday morning over here. Sunday is the day for more higher term time frame looks on Bitcoin and perhaps even a few other assets as well, if time doesn't allow for it. Other than that, if you're interested in short term time frame analysis, definitely check out yesterday's video. It's going to be the same thing basically, and the day before that as well, for what it's worth. Also, what I wanted to quickly put some eyes on here was the Krown trading application, because I thought this was super interesting on the polls, as we do see the community is evenly split between what comes first, $23,000 or $16,500. So I just thought that was super interesting right there, because it kind of accurately reflects the sentiment within this market. Anyways, today's video is only going to be focused on the higher term timeframes and only going to be focused on realistically the next 2 weeks to month and a half to come, and focused more or less on the probabilistic analysis that we've been sticking to for a while now on this channel. And first and foremost, starting off with the daily here, this is the daily look for CME. Again, we're referencing the volatility versus stochastic momentum signature, this chart right here. And I want to then relate that into other higher term timeframes so that you can see where these major pivots are coming in from and where sort of the pain points potentially are for Bitcoin, where things start to kind of change around and where we actually get confirmed major signals. So what essentially is a signal? If you're new on this channel, then you probably need an explanation. If you're not, then you probably don't. But looking at it right here, it's a volatility versus momentum signature. Volatility represented by this indicator, the BBWP indicator, and anytime that we have seen it get below 10 percentile or more, which is where my cursor is currently angled at right now, over the full history of CME, the expansion phase from these extreme lows, from these extreme contractions, has led to an average move of about 24.25% over the course of about 2.5 weeks. And the stochastic also has been correct in getting the direction of the volatility expansion that follows after contraction 83.33% of the time. So as of right now, you can see that it is fully contracted. I mean, it can obviously go lower and stay lower for longer, but we're looking at a pretty historic move here, likely for Bitcoin, because the longer that this volatility indicator stays lower, the bigger the implication is for the ultimate resolution phase, which will naturally come. I mean, it is quite literally just mathematics here. And so to put this in perspective, when was the last time we saw this low volatility environment for this long? Well, I mean, it's really comparable, I suppose, mostly to June and July of 2020, before Bitcoin was winding up for the mega macro breakout. In this case, that was an upside move, obviously. That was this move kind of born upon this region here. And other times that are comparable are this downside breakdown over here, actually in October to November of 2018. Did stay a little bit lower for longer, I should say, however. But yes, that was a 50% move to the downside. So obviously volatility is direction neutral. That's why we use this stochastic also to kind of get a bias on the direction. So first and foremost, when speaking about confirming the signal, it is the volatility component that is the most primary subject. And that would imply two things minimum. One, the BBWP needs to be above the moving average with positive slope. And then two, the BBWP needs to be above the critical zone, which I define as about 10 percentile on this particular time frame. So once those two things happens, well, then we reference the direction of the stochastic oscillator, and that is what gives us a highly probable direction. Again, highly probable is not the same thing as certainty. We're not talking about 100% certainty. As always, if you have any sort of a means of getting 100% certainty, definitely let me know. I'd be very interested in such things. Until then, this is the best that I can do. And so as of right now, with volatility extremely low, but not expanded just yet, not confirming that signal, we do observe that the daily for CME stochastic oscillator is pointed to the downside direction. Here's the important part, and what I really want to be the focal point of this video is where these pivot points are coming in from. Right now, it is 19,500. Obviously, Bitcoin closed below that level on Friday for CME. CME doesn't trade until actually later today and Sunday, so it'll open up down yet again. But a few other things of interest here, which I think do kind of, goose the odds still in the downside. One is obviously trend. Two is this rejection here along this trend line regression coming in from March 22 highs, connected with the summer highs as well, that try to fit $25,000 to be exact. And then three is also going to be the rejection of the bullish control zone, plus still remaining downside angled. So I would say that does kind of set it up in the short term for a little bit more, downside angled here. Again, until the volatility component fully confirms the signal, there is still some hopium. And it would actually be a really fucking phenomenal rally too. But when we reference the stats over here, we can see that the areas of interest, mainly along the average move and then the two ends of the first standard deviation, which gives us a range between about 15% all the way up to 33.33%. Well, that would give us a targeted range to the downside on the lower end at around 17,000 bucks. On the average, that puts us around, or Bitcoin around about 15.5 to 16. And then on the extremes, which is probably a little bit less probable, that would put Bitcoin potentially all the way down to like 13,500 bucks. Anyways, that's the daily. So this is only relevant for the daily, but here's the thing. When we start to relate this into other higher term timeframes, we can see that there's a very similar signature going on right here, for example, on the 2-day timeframe. So the 2-day timeframe, kind of working hand in hand with the daily, obviously it is 2x the actual time taken, which means that the result that we would expect from a similar signal would be greater, and it is actually significantly greater in this case. But first and foremost, I should denote a couple things of interest here. It's a very similar signature. We're looking at volatility versus stochastic momentum, but the volatility component is represented by a different indicator. This is just the volatility of stochastic momentum. This guy right here, or gal, or whatever the fuck. You never know in today's day and age. I'm about to make some bad jokes. But hey, I can do it. I'm a fucking trans as well because I got a hair transplant, so that makes me trans. All right, well, there we go. So I will not complete the rest of that sentence, however. Anyways, in this case, the volatility of the 2-day time frame is at extreme lows right here. At extreme lows comparable to pretty much all of the major moves that we've seen, again, over the full history of CME on the 2-day time frame. There are 10 iterations, actually. One of them happened relatively recently, by the way. Caught that on this channel, as did the last one, was like April, although it was giving us a big buys for the move down from like 40,000 all the way to 25 or so. Anyways, in this case, the average move born upon this signal in signature is significantly greater than the daily, as you would expect, 39.5% almost. The stochastic oscillator, however, is a little bit less accurate in getting the overall direction. 80% of the time it has been correct. 80% of the time it works every time. And then the average days taken is a little over about 3.5 weeks. So again, the daily was about 2.5 weeks on average. The 2-day is about 3.5 weeks on average. And we're also going to look at another higher term time frame as well. And if we were to reference the first standard deviation, it would actually give us a range between about 32% all the way up to almost 47%. So quite big numbers right there. Anyways, what's really interesting about this right now is that we are seeing one of the lowest levels on the volatility component for the 2-day time frame on CME. The only other times it's been lower was actually more recently in August. And then before that was the June-July saga, which was, again, if we reference the daily that we started off with, that was also significantly low for long in that region as well, which I just thought was interesting. Anyways, in this case, the 2-day time frame stochastic oscillator is actually going to turn down upon open tonight, assuming that Bitcoin remains below 19,226. It did close on Friday, 19,110. So it will very likely open to the downside, barring a $100 rally before end of day, which is actually very feasible. I mean, it really wouldn't be asking for too much, to be fair. But for right now, Bitcoin is below. So again, probabilistically speaking, the little bit more relevant to be looking to the downside. Now, there is also another thing on this one, that the 2-day time frame volatility component is actually getting a positive slope as of right now. Obviously, it's not above any sort of critical region, but it is starting to look a little bit more interesting, let's say. So again, putting the puzzle piece together, just keep these numbers in mind. Over here, we had 19,500 on the 2-day time frame at 19,226. Actually, and of course these are going to update this next day, like tomorrow, Monday. So tomorrow, Monday, is going to be a big day. Now, moving on, or actually, let's also reference the percentages as well. Again, on average, about 39.5%. From signal given. So where would that be? That would be technically right here. So how far down would we be looking? Well, 32% obviously, which is the lower end of the first standard deviation, puts you at like 14,000 bucks. That's already pretty bad. 40% puts you at about 12,500 to 12,000, and obviously like 50% puts you 10,000 or so. So again, areas of interest to the downside if confirmed to the downside. Anyways, moving out into the 5-day time frame, this is also another one that we've been watching quite a fair bit on this channel, and it is set up for yet another major signal as well. Now, if you've been on this channel for even the last few months, you saw a tremendously large signal back here in April, and you saw another one actually in August as well, before the last meltdown from 25,000 bucks to where we're at right now. Here's the thing though, the 5-day BBWP has come back down to reset. Below the critical level, which I on this time frame define as 15%. And by the way, these LARP lines over here, funnily enough, looks like they're playing out as well. I'm gonna get rid of them just to avoid confusion. But basically, anytime that we have seen the 5-day BBWP get down to this level over the past 5 years, the average move born upon the expansion phase was about 42.35%. So what's interesting about this one is that compared to the 2-day signal over here for CME, the average moves are actually kind of similar, which I wouldn't have expected. But you know, this is the 5-day for spot price action, not for CME. CME does not have the history to really populate an indicator like this all that well. But spot certainly does, as it has, you know, like 13, 14 years now. Or is that even right? Yeah, about 12, 13, 14 years, somewhere around there. Anyways, in this case, this signal does theoretically take longer than the 2-day one that we observed over here. This one was about 3.5 weeks. This one on the 5-day, about 37 days on average. And the first standard deviation would represent a range between about 35.25% all the way up to 49.5%. So very similar actually to the CME one over here, just completely different time frames and theoretically different charts as well, being that, again, this is spot and that was CME. So there's, you know, 2 days less of trading for this one. Anyways, what I want to point out on this one is that while it does go back into a full contraction phase over here, you know, we can reference the stochastic oscillator, which has actually been perfect. It's literally been perfect in the past 4 to 5 years now, in getting the direction of the volatility expansion once expansion has been confirmed. As of right now, a couple things of interest. First and foremost, it is still to the downside, and it will remain to the downside on the next closure if Bitcoin closes below 19,550, which was the same pivot as the daily, by the way, for Friday on CME. But here's the thing. The 5-day for spot price action doesn't close tonight. It closes tomorrow night, actually. So assuming that Bitcoin remains below 19,550, again, probabilities, you know, do still suggest that downside is just more likely here. I would add a major counterpoint to this, however. You can obviously see that it's already in critical regions. And yes, all major meltdowns in trending markets and major melt-ups, by the way, have happened under extreme conditions, but theoretically should be less likely once you get into regions like this. And then also it will be fulfilling a trendline regression test probably on the next tick, actually. So there'd be a little bit of hopium, I suppose. You know, I still want to remain open-minded until we do see the signals confirmed. But again, it gives us an idea of what the stakes are if and when it does get confirmed. So if it gets confirmed to the downside, we kind of already know the targets, right? Basically like 15.5, 14.5, and then 12.5. You know, those sort of numbers continue to pop up quite a fair bit, and also, sorry, 16.5 if I didn't say it. Kind of look at that as a range between like 16.5 to 15.5, by the way. And if it comes to the upside, you know, we're very likely looking at a tremendous move back up to the summer highs, which was 25,000 bucks. And at that point, you know, Bitcoin even just trades a tick above the summer highs. I shouldn't necessarily say it like that, but especially if you get like a daily closure above there, very likely going to see that extend even more. Because I'm just looking at the average right here, because obviously that could go all the way up to like, you know, 50 almost %, which would, you know, put Bitcoin's closer to like 29,000 bucks basically. So I did think that that was rather interesting, and I do think that we're very likely to see a lot of these signals confirmed this coming week. The reason why I say that is because when you do get this low for this long on the daily BBWP, it is designed to expand from these levels. So with that in mind, that's going to then very likely bleed into the 2-day time frame, which then bleeds into the 5-day, and you can see the domino of effects going on right there. Anyways, I'm 14 minutes into this video. There's a couple other things I want to reference really quickly here. Daily, Elsa's swearing in Spanish in the background because she fucked up probably the Quest. We have like this VR set. It's really, really fun to use. Although when you're sick, not very fun to use. I'll tell you that straight up. Daily over here for spot price action, again, anything below last week's low is still just another lower high, obviously. We do observe that there is potential descending triangle starting to be constructed here. I still look at confirmation with a daily closure below 18,100. That's the big number for me on CME, by the way. On spot price action, if it even just trades below, what was that, Thursday's low, probably going to see the breakdown emerge from there, to be fair. Also of interest here is the weekly stochastic oscillator for spot price action, which closes tonight. Any sort of a closure below 19,850, and it will actually, once again, open to the downside. Just like the 5-day, though, it's in like super critical regions right here. And if we do see any sort of a turn up, like Bitcoin's going to move so fucking fast to the upside. If that happens, it's going to be one of those like impressive moves, right? But in this case, as long as it's below the pivots, I still have to look at this from a probabilistic standpoint that it's just more likely to move down there. Here's the thing though, you can very obviously see or probably obviously see, this trend line regression coming in from the highs of November. So this was the all-time highs. This was the all-time highs in November at $69,000, connected with the highs in April, which was the bull trap at $47,000, and then once again hit that same level at about $25,000, and now grinding up against it again. And this is typically how these things are broken. So I really would not still rule out the possibility of a humongous bear trap within this region, because if you do see this pivot reclaimed, like it's going to move fucking fast to the upside. Until then, though, again, probabilistically speaking, just more likely to be looking at, or just more reasonable to be looking at downside. Again, that is the same direction as the trend here as well. So I hope that this was that this video was in some way helpful. I was trying to look at some just data today, not trying to put like an opinion on it, or as least as possible as I can. So yeah, I think that's a good place to leave it off. I completely forgot to mention Bybit's promotion. They got 0% maker fees for with the link in the script. What you already fucking know. Look, no one new is coming on this channel at this point. It's only me and the TA Audis right now. And if you're a TA Audis, well, you're one of us, my friend. So more power to you. I'll be signing off on that note. Much love, take care, and see you hopefully soon.